Hi, Paul Slatkus, Good News Broadcast. I'm speaking to Michelle Thornhill. Hi, Michelle. How are you?
I'm doing good, Paul. How are you?
All right. You're the Senior Vice President, Diverse Segments at Wells Fargo, and you're going to help us about establishing, improving, or maintaining our credit. Okay. And today, probably more than ever, credit is a big concern. And there's a difference between credit. What was that? It was a difference between credit history versus a credit score. What is the difference?
So, your credit history is really documentation of how you've paid your credit or managed your credit over a period of time, whereas your credit score, which is compiled by the three credit reporting bureaus, is a number between 300 and 850, and it gives lenders an idea of what type of credit risk you may be.
Okay. And is the credit score the one that, if you want to get a mortgage or so on and so forth, that's the one they use?
Yes, certainly when you're applying for credit, your credit score, just as your credit history, is one of the factors that are used to determine your credit worthiness. I think certainly your employment history, as well as your residence history, whether you own or rent, are also factors used to consider or determine your credit worthiness.
Aha. So now October 20th today is National Get Smart About Credit Day, and you also have a wellsfargo.com /smarter lower
Underscore credit. Yes.
there. Thank you. Credit, and we'll link on over there. So what are some kinds of things that people can do to keep their credit up?
I think one of the most important things is to make sure that you're paying your bills on time. Paying more than the minimum amount due is also important because it will create an opportunity for you to either pay down your balances or pay them off. I think certainly being mindful of how much credit you have or are getting is also important to your overall credit history.
Now, you guys did a survey. What was that all about?
The survey was really to understand how homeowners rated themselves in terms of understanding their credit history and credit scores. And what the survey indicated is that most homeowners gave themselves a C or below in terms of really understanding their credit history.
Uh-huh. I'm a product of some mistakes on my credit score, and I can only suggest to anybody that you should, one, get it right to begin with, but then to keep your eye on it, because mistakes do occur, and unfortunately sometimes they occur at the moment you need to have a good number. Is that so for many?
Absolutely. And the best way to do that, which consumers can take advantage of because it's a free resource to them, is that they can get a copy of their credit report for free on an annual basis from annualcreditreport.com. It will give them their credit history for the three credit reporting bureaus, as well as they can request a copy of their credit score. And again, having the information in hand, understanding if the information there is right or if there are things that are incorrect, and then working to get those corrected is definitely very important to your overall credit history.
And is that first one, that annual one, the free one, does that affect your credit rating at all?
It does not, because you're not applying for credit, you're just getting your report.
But I can only say to everybody, do it, because when you want to really utilize this and take advantage of the assets that you have or whatever it is, it can be problematic.
Yes, I mean, I think the most important thing to your statement, Paul, is to be proactive.
Yes.
Don't wait until you need credit to get understand what's on your credit report. Is taking the action before you need it, understanding what's there, and then coming up with a plan if you have had some credit challenges in the past or some late payments to improve your credit.
If I have, you get these credit cards to different places, say extra credit cards, or maybe I have a 3 or 4 savings account or whatever. Is it good to consolidate?
I mean, I think it's one, looking at your financial needs. It's hard to say, for every consumer you should consolidate, because I think it's important to look at what type of credit you have, the interest rates that you have on those credit cards, as well as do you have balances, have you already paid them off, and then determining what's the best situation for you. Should you close some accounts? Should you pay off some accounts? Or then should you consolidate some accounts? So, I mean, definitely having your credit report, but then taking advantage of any opportunity to go to your local bank and meet with the banker to help you sort through some of that information.
Now, a banking credit card, it works like just the overall, named. They're part of them, right? I mean, it's an association with the bank and, say, the Visas, American Expresses, MasterCard, or whatever. Is that the way they work?
That's correct.
Okay, so if you have a few credit cards, say you have a credit you have your ability for, say, $5,000 in each one of them. Does somebody ever look and say, you have three, you have $15,000 potentially you could take out in a heartbeat? And does that concern somebody selling you something?
Certainly, that can impact your credit score. Mm-hmm. It may factor in whether there's, the magic number to have and how it impacts. I think that's going to vary for each consumer because it's going to depend on their overall credit history or credit report. But certainly, I think, particularly as we see over the last couple of years, with the difficult economic times, really keeping track of what credit you have and what you need, and then making sure with whatever credit you have that you are paying those bills on time. That's the most important thing I think consumers can do.
How about like a young person just coming out of, say, college, or not out of college, just, 20s, so on and so forth? What should they do? How do they establish credit?
I think the first thing I would recommend is that they establish a banking relationship, whether they're opening a checking or savings account at their local banking institution, because that will then allow them to apply for a credit card or a student loan or a car loan based on their financial needs. So again, applying for credit, maybe it's a credit card, but again, making sure that you're making those payments on time when you get that new credit.
Last question, and thank you, Michelle, because you always have a lot of in-depth information for our audience, and it's much appreciated. What's good news for you?
Good news is that we have an opportunity to help consumers make better or informed choices about their credit, and hopefully that will put them on the path to greater financial success as we go forward.
Great. Thanks, Michelle, for sharing.
Thanks so much.
Take care. Bye-bye.
Thanks, Paul.